in the market over here. We are down about 1% on the S&P 500. We are seeing some names though showing in sectors showing signs of absolutely incredible strength. Again, there's a lot of kind of weird things going on right now, and I think what this feels the most like is what we saw earlier this year, and you guys can kind of hear the same kind of tone that I had then now, where we look at everything that we are seeing, we look at the board, and we kind of think to ourselves, why are we seeing this type of aggression? Now, I think this is kind of where I am right now. I think the fact that we saw the levels of aggressive selling and that significant drawdown that we saw in the beginning of this year from peak to trough, that really freaked people out. And I think people are a lot more worried this time around that we are seeing a little bit of this pullback in the market here. And that's why we're seeing a little bit more of this, these increased levels of volatility, even though all of the different kind of metrics that we're looking at here are not really suggesting anything that is significantly wrong. Like the last time that we were selling off like this and we saw these levels of volatility and these levels of fear, what did we have? Well, we had these crazy tariff rates coming out. You had a Federal Reserve saying that these types of policies were going to lead to a drastic spike in inflation, and everybody believed them. Now, at this point right now, what are we actually seeing? Well, when we take a look at everything across the board, we see positive developments between the US and China as it relates to trade. We have the government reopening, and a lot of people are talking about this AI bubble stuff, and I think this is interesting. I've seen this floating around, and Ryan just sent it into the Discord again. It's like Warren Buffett just bought Google. You really think Warren Buffett or Berkshire Hathaway is going to be buying something like Google in the tech and AI space in a time where a bubble is actually occurring? Warren Buffett would be one of those individuals, or Berkshire Hathaway in general would be one of those groups that would look at the market and be one of the first to point out that things are very overextended. So I think what we're seeing here is just kind of like a domino effect of fear and uncertainty in the market, especially as we're going into the FOMC minutes tomorrow, and also the NVIDIA earnings report tomorrow as well. NVIDIA's earnings report tomorrow is huge, and I also would expect to see some increased levels of volatility around the FOMC minutes. The way I view the minutes and what they're most likely going to come out as tomorrow, guys, is the exact same thing that we have seen we had seen in the last FOMC meeting, which is, again, they cut interest rates, they had a good argument to, and now they're going to wait and see moving forward, because the main thing that they're looking at here is, okay, the government shut down, they're not receiving the data. It doesn't have anything to do with what the data actually is, it's the fact that they don't have the data yet, and that is what is driving some of these levels of uncertainty. But I think a lot of people right now are getting very worried, and if you guys are looking at significant drawdowns across your, let's say, mid to long-term investment portfolios here, kind of going into like negative territory on some individual names, you really have to sit back and learn the lessons that I have been trying to showcase to you guys over really however long that I've been doing this on YouTube for everybody. You can't listen to the masses with a lot of these names. You have to have a very, very specific approach and process to when you're going to be buying individual names. Again, like think about like HIMS or BMNR or a lot of these high flyers that everybody was talking about there as being those next, maybe not HIMS, but BMNR and SPAT as being those next big things. And look what's happening to them now. They're absolutely getting trashed. And again, it's the whole pay attention or pay a premium concept that I talk about with you guys all the time, and you have to learn those lessons. And one of the things that I was thinking about yesterday too is that in whatever kind of phase we're in the market, whether we're ripping, whether it's chopping at the highs, whether it's moving back to the downside, but the really, really big shifts in the cycle, whenever you're in a point in an individual cycle, you have to be preparing for the next one. You can't be thinking, ooh, this is the cycle that we're in, we're going to continue lasting forever and ever and ever. No. You have to always be thinking about, okay, if we were to see a period of increased volatility and aggression out of the market here, what would then happen to your account? And then you have to act accordingly, which is why I've been saying it's like the people that are probably freaking out the most right now are the people that have bought garbage at the highs because everybody told them to, going in on leverage, and they don't have any idea what they're doing. That is what I'm talking about. It's you have to be making sure you're keeping yourself safe. Now, that doesn't mean go out and sell everything right now. I'm not doing that. I don't think anybody should be doing that. But again, I'm 26. I have a hopefully very long investment horizon here. I'm not looking to go in, out, create a lot of these taxable obligations in these longer term accounts. That doesn't make sense. But if we do see really good buying opportunities in some individual names coming up over the next month here, that could be very fun. So, ladies and gentlemen, welcome back. It is that time of day again. Say good morning to somebody in the live chat. If you guys would like to say good morning to me, would love to receive some good mornings over here. If you guys are new to the group, new to the stream, new to the channel, let me know. I'd love to welcome you guys in here. And as always, ladies and gentlemen, make sure you guys are hitting that like button on the way in. It costs you absolutely nothing to do it, but it helps me out a whole lot, spreading these streams out to as many people who actually want to learn. We've got a lot of slackers on the like button today. A lot of slackers. That's what happens when the market sells off. Everybody gets scared. They're like, oh no. You guys think I'm worried over here about this market? No. Not even a little bit. It could nuke like it did during liberation period time, and I still would not care. 0% caring. You know why? It's just better buying opportunities. You have to have that longer term vision or you're going to fail in the market. They want to give us buying opportunities? Sell the market off 30%. You want to continue acting irrationally in the market? Do it. Keep doing it. So, again, guys, let's do our little bit of a roll call here. Say good morning to everybody. Make sure you guys are hitting likes on the stream, sharing the stream with people, just so that they can kind of understand, hey, this is what we're looking at here. No slackers. We have a 200 like goal on the stream. Let's see if we get it. So, let's see who we have in here, ladies and gentlemen. We have Jerry, GC, Gerald, Eddie, Jay, Mario, Yuki, GC. We've got a lot of people lurking over here. Was everybody sad that the market's coming down? Are you guys sad? Like, I don't get it, man. Like, we're seeing, guys, the fear and greed index, I tweeted this out. The fear and greed index is at single-digit levels right now. It's at 8. And, like, how far away are we off the highs in the market here? I don't know. 4.5%, 5%, nothing to, maybe 5%. That's nothing. Yeah, we just crossed, like, we crossed 5% drawdown in the market today from peak to current trough. Okay, like, it, I don't know, like, they want to indiscriminately sell this thing, let them. Get all the leverage out of the market. Wipe out some of these people that have just been, like, buying into garbage with no plan. You know? So, couple of the sectors that are looking absolutely phenomenal, guys, that even when this market is moving to the downside here, healthcare. XLV looks absolutely nuts. Healthcare looks great. And again, some of these healthcare names too. Eli Lilly looks just absolutely ridiculous here. This could be another one very similar to what we did with Johnson & Johnson a month and a half ago. One of the big 35 10x trades that I handed out to the LTMP group. Now, also, this is the other thing that we should talk about here too, especially in market environments like this. Like, I talk about a lot, like, if you guys actually are looking to have long-term success in the market, you have to be able to fully capitalize. I'll talk about ARM in a little bit, but you have to be able to fully capitalize on the periods in which the market is giving you really solid opportunities. And again, like, think about what we were able to accomplish during that 3.5-4 month period. 35 10x plus trades were handed out. Anybody that wasn't in LTMP, wasn't nailing these trades, is at such a significant disadvantage in time periods like this because they have no buffer. They have no, like we sat here, and once that tweet came out with the China escalation with the trade war, we just said, okay, we're just going to sit here and not really do a whole lot. Why? Because we don't have to. Most people out there right now are seeing their accounts deteriorate lower and lower and lower and lower, and they are thinking to themselves, they have to do something right now. They have to try and save it. No, we don't have to. Why would we have to? We just sit here and do nothing. We wait for these great setups to form. And if you think about it too, there were 3 10x trades last week. Rivian, Lyft, FedEx. So even with those 3, you guys are correct. It's just like, you have to, if you guys want to have any chance at having long-term success in the market, that's the way you have to operate. And especially when in the time periods where the market is looking really good, that is going to always carry you through the periods where the market's a little bit choppy. If, again, like I say all the time, pay attention or pay a premium. I'm trying to help you guys here. If you guys understand that, you're going to have a lot more success. If you don't, you're probably going to end up failing. You know? But yeah, keep smacking that like on the way in. We'll talk about ARM for a second here. I mean, what is this looking like? Garbage chart here. This looks horrible. Just nuking to the downside. You're losing the 200 EMA. You came up, you retested it. I would not be surprised if you saw this one come down and test 126. Not at all. What else? Let's take a look. Gold, I mean, it's still green on the day. This is on the weekly. We actually might see another really solid gold setup here forming over the next kind of 2 months. Again, this was one of the best trades I think that I've given to everybody. I mean, this was the gold weekly breakout at, what was it, 317? Yeah, this thing ran all the way up and over 400 here on GLD and what, 1, 2, 3, 4, 5, 6, 7, 8 weeks. That was absolutely disgusting. And again, that was one of the 35 10x trades that the group was able to hit. So, I mean, let me see. Where's, what do you call it? Eli Lilly over here. What's that looking like? Nothing. Just chopping around. Market. Nuking again. Nuking. But let's take a look at some of these individual names here. Neo reports earnings. They lost their weekly consolidation period and are just coming back down. Most likely going to be coming back to that 200 EMA here, that 550 area. You do have earnings, so that's kind of going to be the main decision maker for this thing moving forward. But like I always tell you guys with Neo, one, it's not a big position. I own, what, 4,000 shares at 455? I don't, like, it's not a big position. If it hits and they are able to accomplish the goals that they've outlined to shareholders over the last few years, then yeah, they're going to get re-rated a lot higher depending on the market environment that we're in. If they're not, okay, whatever, you know? Palantir over here. Again, this is one that I'm actually surprised is not breaking down a lot more in this environment. Like, I think, okay, so I think when you hear people talking about bubble, and if that, let's say, is one of the main reasons why we're selling, which I don't think it is, you would then also expect to see a lot of these like very heavily involved AI names starting to get absolutely nuked. Now, granted, Palantir was over 200 and it's at 167, but a stock that trades at such an elevated valuation like Palantir does, if you were to see a bubble bursting, you'd see this stock getting murdered right now, which you're not seeing. So moving to the downside, obviously not a good looking chart here. But again, like I said all the time, it's like this, the market's going to start holding this name to a higher standard. And quite honestly, it really hasn't started doing that yet. They continue to knock it out of the park with their earnings there. They're doing everything that they need to be doing in order to grow their business fundamentally on a commercial revenue side and a government contracting side. I mean, again, this is another name that I gave to you guys at 15. Oh, it's at 167 still, but it hit 200. Oh, boo-hoo. Like, Sofi over here, I think this is still above 25, right? Yeah, 26.14. I mean, I gave this one out to everybody at what, 660? Then again at 1360, or yeah, 1360 breakout. So you're still you're very close to still being up 100% from when I gave that to you guys. On the free one, the weekly breakout, 100% higher than when I gave it to LTMP. But yeah, I mean, this is not a good looking chart either. Probably going to end up breaking to the downside, especially if the market shows any more weakness here. I wouldn't really be surprised if we saw that come back down to the 200. But the thing is, guys, is a lot of these moves in the market, personally for me, if they're going to sell this thing off, I'd prefer them to just nuke it as far as they possibly can. You know? Like, I'd love for them to just kill this market. Have a 10% drawdown, have a 15% drawdown in the broad market here, because not only is that gonna give us really, I mean, hopefully, really solid opportunities with bases for individual names, but it's also gonna provide us really good opportunities again to go do another round of like 30 or 40 10x trades. And that's the important part. It's like I get a little bit weirded out when the market's just chopping around the highs because it's a lot harder to see that giant follow through. We still did it, but it is a little bit more difficult to do. Then again, HIMS has just been getting absolutely murdered here as well. So that actually is starting to get down to the levels that we've been talking about with this one, this 33 area. I think this is going to be an important zone here on HIMS. I actually kind of want to draw this out. Right around this area right here on HIMS, kind of sub 30 here all the way down. It's kind of like this mid block between the 20s here. I think you can see HIMS chop around it. You might be thinking, oh, that's a wide range. It's like, well, HIMS has a crazy level of volatility on it. So you easily could see this thing chop around in this wide range for a little bit, but I would watch this zone here. That could be another interesting spot there to look for on HIMS to continue moving down towards AMD, my baby. How's that doing today? Probably not great. Yeah, no, AMD down 5% there, not looking good. But again, I'm not looking to do anything on this. Why would I touch my AMD position? I own it at $11.39. It's at 226. My basis is negative. Why would I touch this? I wouldn't. So, I mean, I could sell another like couple blocks of like 100 shares, for like 100 share blocks, but like I don't really want to. One of the main reasons for that is, again, I don't believe this narrative in the AI bubble. Because, and I'm going to make some probably Instagram and YouTube shorts about this today and TikTok videos. It's like, well, the time period that we are in right now, and I'm going to keep talking about this because what I see a lot of is a lot of the things that I say go in one ear with you guys and out the other, which is, again, not good. I don't know why that happens because I just keep saying things and then it's like, hey, guys, I warned you 5, 10x trades ago, 10, 15, 20, 25, 30, 10x trades ago that I handed the LTMP group. Do you get it yet? And some of you guys still aren't paying attention. So, Space Trader, nice. See, being risk off feels great right now. Exactly. All of you guys that have listened are in such a better position because you're able to preserve capital and wait for those epic trades that are going to inevitably form. It's not like the market's over, guys. ES is not going to zero. Bitcoin is not going to zero, even when I say it is when I troll on Twitter. What were we talking about? I forgot. But where's MNST? Oh, MNST is actually still looking all right here, even after the craziness that we saw yesterday on this thing. So for those of you guys that are still in that one, we'll see what happens, but it looks good. But stocks only go up. I mean, yeah. But I keep saying these things to you guys, and those of you guys that have listened, it's benefiting you. Those of you guys that haven't listened and have tried to do the opposite and have said, nope, I'm not going to listen to these warnings, you're probably really not having fun in this market. So, let's see. Let's see what we get here. Yeah, gold looks good. Where's the market? That does not look good. Things going in one ear and out the other. Yeah, see, I knew we were talking about that. I just forgot what else we were talking about. This does not look good. Like, think about it, too. Like, when we were talking about, hey, guys, you probably don't want to be looking at those, like, BMNRs and SBETs. Like, where are those today? Are those getting touched again? SBET's up. That's interesting. BMNR. Those are up. Is Ethereum up? That's actually interesting that Ethereum's up. Did Bitcoin snap back to the upside there? Yeah, it did, actually. So this is interesting. So this is something that we were talking about a little bit. I tweeted this out, and I was like, you need to hold this prior all-time high zone right here that you're seeing on Bitcoin. We talked about this zone a lot at the beginning of the year. All of these tests you broke down. I did give you guys this actually downside one on Bitcoin too, I believe, when you ripped into this zone, and I was like, yeah, I don't think that's going to... Oh, AI bubble? Oh, with AMD? Yeah, I don't think we're in an AI bubble. I keep saying it, but it's like, if you're in a... One of the main things that caused the big sell-offs during .com was the Fed looking at all of the crazy speculation out there in the market and hiking rates, decreasing the availability of credit across the system, and all of those internet companies that had literally no revenue were then no longer able to finance their day-to-day operations, and they went out of business. That's a lot of what happened. And then it spread. Then the contagion spreads, and you go, nuke. So now think about what we're seeing right now. Is the Fed, or do we have really any inkling that interest rates are going to go up right now? Not really. It's actually going to go the other way. So even if we are in a bubble, we're still, in my opinion, at the beginning phases of it. We haven't even gotten to the neutral rate. So what the Fed is determining as kind of being not restrictive, not, let's say, accommodative in the system here. We haven't gotten there. So how can we kind of make these AI, these bubble arguments when that's the case? And also, with the developments in AI that we're seeing, you actually could even further the arguments for more rate cuts coming in the near future because AI is leading to more layoffs. Okay, like there's so many different things, guys, that people just need to account for. And again, make sure you guys are hitting that like button on the way in. Costs you nothing to do it. Helps me out a whole lot, spreading these streams out. And again, for those of you guys that still need to hop into LTMP here before prices go up at the end of the month, again, you guys get to lock in the lower rate. And if you use code November here, you get 50% off your first month. So again, like we were talking about before, if you want to have success in the market, you have to be prepared for those periods in which the market is going to give us great opportunities. Now, what a lot of people do is they sit around and they say, no, okay, I'm going to wait. It's like, okay, you can do that. That's fine. But what's going to happen is you're going to miss the big ones that are going to end up forming. Like, let's say, like when I tell you guys, oh, look, I told you 10x trades ago, 15, 20, 25, you're going to miss them. And it's like, okay, I don't know how else to help you there. I'm telling you guys exactly how to do this stuff. So let's see. I mean, again, right now, we're just really, really doing our best to just sit out our hands. And if there is a really great setup that forms, we can take them, but we have to be very careful. In size very, very, very small. Let's see. So, I mean, you have Warren Buffett buying Google. Like, well, not actually Buffett. He's not really doing all that much anymore. But, I mean, he's going to make decisions at the end of the day. Where's MNST? It's still holding well there. This is like, I can't even, this is an epic setup here. I mean, MNST looked really good too. There's a lot of volatility on this one, but this is why, and FedEx is a great example. Here's another good example. What have I been saying to you guys over the last month? Size for zero. In order to, like, the winners, guys, are going to be absolutely massive if they do end up following through. But you have to protect yourself in the short term for all the volatility that we're going to see. Okay, the FedEx 3,000% trade that was handed out last week, the only way to be able to actually nail that one was to size for zero. That's the only way to have actually hit it and to feel comfortable holding that position. Like, just think about it. Like, you have, let's say you have a $10,000 account. Let's just do it this way. Just to, like, get this math across to you guys. You have a $10,000 account. You go into the position with 1% of your account on options, which is $100. Okay. So you're in the trade. It's flashing around. It's a little volatile. It goes up. It goes down. And then all of a sudden you see that massive rip to the first target, which would have probably put you up, I don't know, 300%, let's say. All right. So you make your position free. You sell half of it. You sell half of your position. All right. Simple math. So you're up 1.5% on your account with a risk-free position. Okay. Then the stock continues. You have 0.5% of your account in the trade, and it runs 3,000%. That means that you have now just returned on the free part of your position 15% of your account. Why is everybody in the market not operating this way? Why are they trying to do all these other things? Why are they trying to trade so much? Why are they trying to oversize? I don't know. That one trade would have given you such a massive buffer. And okay, now you're up 15% on your account. You could go into 1% risk with 15 additional trades. 15. And if every single one of them go to zero, which they won't, you're back at break even, the same place that you started. Not red, just where you started. That's the that is why everybody loves what we do in LTMP, because of that math right there. Do I think Tesla's about to dump? I don't like, I just am not the biggest fan of Tesla in general. I mean, this chart right here is not looking good. I think if you are going to see it further drop in the market here, you're probably going to come down to this 200. It's also the top side of this range here that we traded this weekly breakout of. So, I mean, it could. Again, with this point in the market right now, when you already see these elevated levels of fear, you're seeing a lot of these like high flyer names get absolutely sparked. The only thing that I'm a little bit like not worried about in the market, but something we've been talking about a decent amount in the mastermind, especially when we last night when we were talking about a lot of the economic data, is like we can read the economic data, guys, in the big macro picture, and have a really good understanding of what's actually occurring. But we also have to consider what all of the normies are going to be doing. You know, like what all of like the really inexperienced like Wall Street bets gambling idiots that are just on Twitter following the next hot stock, chasing it way higher after it's already ripped people. You have to think about what they're doing, because there's way more of them than there are of us that are looking at the market from like an analytical perspective and saying, okay, this is what's actually happening, and this is what, let's say, the probabilities are suggesting the market should be doing. But we also have to think about, okay, if there's crazy amounts of fear in the market, if you see any sort of slipping like we've seen over the last, like, let's say 2-3 days here, everybody's just going to start selling because they don't know what's going on. They're going to hear bubble, they're going to hear no data, they're going to hear no rate cut, and they're going to freak out. That's why the fear and greed index is where it is. You know? So that's kind of the one thing here that, and we've seen this a few times where, like, okay, so we had that period of time where the market was really worried about this escalation between the US and China in the trade war. Now, logically, what do we know is going to happen every single time that happens? We're going to see a little bit of volatility. They're going to have a meeting. The meeting's probably going to go pretty well. They're going to come to an agreement on a certain amount of those pain points on each side. They're going to come out and say that we've gotten a great agreement, and then they're going to push out and kick the can down the road of all of the other bigger elements that they couldn't come to an agreement on. That happens every single time. Okay, so then logically, why would the market nuke on that when we know that's going to happen? Or we know that that's a very high likelihood of happening? I don't know. But that's a good example of it. Then the government shutdown stuff. Okay, the government's not going to stay shut down forever. They open the government, the market rips a little bit, and then we start going back to the downside. Okay, why? Still a lot of fear. Then you think about the situation with the government being shut down and the fact that the Fed is not receiving the data that they want. Now, the Fed coming out and saying, this is us understanding what's actually happening. The Fed coming out and saying that rate cuts in December is not a certainty is not based on the data coming out. It's based on the lack of data that they're receiving. It's not like we received like a really hot inflation print or massive job growth or a jobs report that came out and showed the unemployment rate moving to the downside and a significant addition of jobs. That's not what we've seen. We've actually seen the labor market weakening. Private payrolls are going down. We saw one of the worst jobs reports, I think, in private payrolls in October that we've seen since like 2002. So then you have to think about, okay, so then the Fed needs to look at the other elements of the data that they need to make to figure out if they want to cut in December, which, I mean, we'll see, but it doesn't have anything to do with the actual data. It has to do with the lack of data that they're receiving. So people are going to look at the statement that the Fed said, oh, we don't know if we're going to cut, and just say, oh, no rate cut. That's not what that means. It means they need to see the data in order to actually make a decision, which again is uncertainty. But if we see an inflation print that's at expectations or even a little bit lower than expectations, which I believe the last CPI print that we saw was right at expectations, they're going to cut. And then when you think about rate cuts in relation to the overall climate that we're in, which is, okay, even let's say if we don't cut rates now, we're probably going to get a series of rate cuts in 2026. Well, it increases the availability of credit. You could see interest rates across the board go down. You could see more money going into these tech companies. And then what happens? Okay, it's the same thing. And this is happening globally. You have Japan looking to do more stimulus. You have lots of other central banks looking to stimulate across the board. Now, on the flip side, that could lead to more inflationary pressures in the system. But if you're still going to see some, like, because I think we've talked about this a lot, that the tariff stuff is actually really is deflationary. It's not inflationary. I think that argument is kind of been sealed there. It's not, like, at this point, you can't really, like, the Fed has now admitted that they were not correct. So it's like, okay, well, is any, like, we used to debate this all the time on the streams here where people would come in and I would just be like, look, you it might be possible, but you can't treat it as the base case, especially when looking at all of the other factors. And what I used to say all the time is get your head out of the textbook. Even just looking at history a lot, if you look at Smoot-Hawley and what it did to the agriculture sector, it was deflationary. It was not inflationary. Yes, the Smoot-Hawley Tariff Act contributed to deflationary pressures, particularly by increasing the effective tariff rate over time due to significant price deflation that was already occurring. While the act raised import duties, the falling prices of goods made the tariffs increasingly restrictive, and combined with retaliatory tariffs, a global trade war, and other factors like the gold standard, they exacerbated the economic downturn and its deflationary cycle. Okay, you know, like when you look at things, guys, you have to look at what's actually occurring, and then say, okay, what are the masses going to think about this? It's like how I say a lot, where it's like you could come up with a really, really good thesis that might be true in the market, like these people out there that are very, very smart individuals that are doing a lot of good research, but most people aren't going to be able to understand it. And it's not going to get widespread in a way that a lot of the people that, let's say, are hanging out, just that are new market participants looking at Twitter and all of these people that are just pump, buy, all this garbage, all these garbage names all the time, they're not going to get it. Again, those supply and demand elements in the market are going to be almost all of the time what's going to rule price action. You know? So I hope this is making sense to everybody. Again, keep smacking that like on the way in. Those of you guys that still need to hop into LTMP before prices go up at the end of the month, make sure you guys hop in there. Again, link is pinned to the top of the live chat. Use code November. You get 50% off your first month to jump in there with us. I bet everybody wishes that they heard my warnings back when that tweet came out. Hey guys, don't touch anything. Market's going to be really crazy. You don't want to be. Look at this. New lows. Uh-oh. Now, what's driving things today? I mean, you look at this here. NVIDIA shares down 2%. Anthropic valued at $350 billion after Microsoft and NVIDIA deal. Yeah, we're also 3 points away now, I believe, from the Liberation Day lows on the Fear and Greed Index. Like I was talking about this before, it's like single digits now in the Fear and Greed Index. Last time it was this low was near the tariff fiasco lows of this earlier this year. And like we were talking about earlier, it's like, well, a lot of the fear that is in this market right now is as a result of what happened around March and April when people saw their accounts just go, uh-oh. But again, a lot of people didn't learn from that. They are still buying garbage at the highs. Like these types of market environments, guys, are why when I come out, when you guys ask me about these individual names that are like, have run up like 100, 200% in like a 1 or 2 month period, and I just scream from the rooftops, no. Because like I was saying before, it's like when we are in these like, let's call it expansionary or like exuberant market cycles, you have to be thinking about what happens to those positions when the market slips. That's why that 3-pillar approach that I've talked with you guys about in the first mastermind and we're going to do in this second mastermind that we're doing right now is so important because you have to be getting these good risk to reward entries on these names. Like NEO's a great example, guys. NEO is an awesome example of this right now. NEO is, what is this at? 585. Now, a lot of people were probably looking at NEO and saw this run on it from 390 all the way up to $8 here, and were buying it up at the highs because they thought that this was going to continue. This is a really good example of this, actually. Now, our entries on this could have probably been a little bit better, but they were still really good. We own this, remember, or I own this at 450. This is where I outlined it at 455. You guys probably, your averages on this could probably be a little bit lower than mine are because you guys were hitting this at some of these bases down here. I was hitting NEO right around this area right here, 455, right around this area. Now, when everybody was asking me about NEO up at these levels in the 7s right here, what was I saying? I was like, I mean, I own it at 455. It's not a big position for me. It's a very volatile name, and it all hinges on the fact and the idea that they might be able to meet those profitability metrics that they've outlined to shareholders after years of over-promising and under-delivering. Buying it up here versus buying it down at those lower levels is a wildly different story. Wildly. Think about the drawdown that somebody's witnessing right here if they were buying NEO up here. I mean, that's what, 26% drawdown on an individual name? That's rough. This is a perfect example. Again, pay attention or pay a premium. You do not want to be paying premiums in this market, guys, because like that's why I say you have to be prepared. Like you can go into some of these riskier names, but you have to have a very, very pinpointed approach and thesis behind why you're doing that and when you're going to do it. You know? I mean, MNST still looking good, guys. I mean, if this market snaps a little, which, again, it's not. I mean, Bitcoin's moving back up here a little bit, but this market's not looking good. Garbage with 1,000x leverage, let's go. Yeah, I mean, this is what people are doing. It's why they're getting themselves into trouble all the time, and that's why the LTMP community exists. Like, not only are you guys going to, like, think about it. Who else is giving you guys 35 10x trades in 3.5 months? Why do you think everybody loves it so much? And we can just sit here and have fun and just be like, yeah, whatever. You know? Like, we have people, guys, making hundreds of thousands of dollars on one trade idea. Gold, silver, the China names. Like, it's just... If there was a better way to be operating in the market, we would do it. But there isn't, so we don't. You know? Yeah, what's the market doing here? It's wicking a little. Then we have the FOMC minutes tomorrow, which are going to probably freak people out. And then we also have, what do you got? We have NVIDIA earnings. 3 times bear ETF volume is giving you a warning. No, that's a result, not a cause. When you see, like, think about it. The market's dying. Okay, people are going to buy those, you know? When the market's going up, people aren't necessarily going to be buying those as much. Think about what everybody loves to do, James. They like to chase. So, like, when the market starts nuking, everybody's going to trade those more, you know? I would not look at that. The one thing, I mean, you could look at high yield spreads. Dave talks about those a lot. But the volume in the bear ETFs is a result, not a cause. It's a result of the market nuking. It's not caught, like, you know? Does that make sense? It's like, people love to chase. Like, obviously, you're going to, like, think about those stocks that go absolutely nuts to the upside. It's like the volume rips at the highs. Like, why is that? Well, is the volume that's happening now the result of what was happening before? It's like, no. And actually, it could be the exact opposite sometimes. Where it's like the volume that's occurring at the highs is just all like the normies coming in and just buying it. People love to chase. But most of the time, and I've said this so many times, 99% of the time in the market, guys, the best decision is no decision. You don't do anything. You just let stuff go. Most of the time, you'll get yourself into trouble by trying to take too much action in the market. I didn't tell you guys about this. I have a massive bruise. Good point. I have a massive bruise on my inner thigh from riding a mechanical bull in Nashville this weekend. I'm in pain. It's fine. I'll be all right. But yeah, I mean, guys, the market's just gonna be doing its thing here. People are gonna freak out. Let them freak out. I don't know why they are. You're moving back up here a little bit. Nothing too crazy. Nothing too crazy. Is there a video of me on it? No. No, I have a good video of my girlfriend riding the mechanical bull, and like her hand is all messed up. She takes things seriously. So it was like, so like when I was holding it and I was like, oh, I'm going forward, and if I continue this, I'm going to crush my hand. She's like, nope, holding on, gonna beat everybody, which she did. Coca-Cola, yeah, you can take a look at it. How's it looking right now? That's fine. It still looks good. If that wants to break to the upside, I mean, I'd like this thing to. I mean, you probably could have a lower entry on this thing now, but like, meh, there's not really much to do on this thing right now. Just sit back, relax, and wait. Always be better setups in the market. Exactly, Mando. And Mando, you're relatively new to the group too. I love seeing like people like you coming in and getting it. You're like, oh yeah, it's like we're gonna nail the best trades in the market, but in other times you just sit there and don't touch anything. Eli Lilly still looks really good though. MNST still holding up there, that's a lot of strength. So buyers are trying to step back up on this thing, but nothing too crazy yet. But yeah, again, I'll throw the link to LTMP in here for you guys again. Again, I don't know why everybody in the market you guys heard the math again. Like even on that FedEx trade last week, yeah. So with that link, just use code November. You'll get 50% off your first month, and you'll be able to lock in the lower rate before prices go up at the end of the month. Rig, what's up with Rig? Is Rig moving? Setting up again? You're kind of setting up again. You kind of have another setup on Rig about 420. Yeah, this one. I mean, after it ran to like a 1-3, 1-4 risk to reward, what did we say? Stop to break even. You know, nothing gained, nothing lost. What were we talking about? We're talking about something. Yeah, I don't know. You're still holding? What are you still holding? Yeah, this could be a fun one. I like this. Looks fun. I mean, guys, that chart on Eli Lilly looks disgusting. Rig? Yeah, he kind of shouldn't be though. Yeah, Eli Lilly looks filthy. MNST, I mean, if the market snaps, guys, that could be very interesting. I know a lot of you guys are still in that one, too. B looks like it can push up. What's B? Barrick Mining. Ooh, yep, that looks good. GLD is starting to form that weekly setup there. It's going to take a few weeks, but it's still looking good. All right, let's see what we get here. Market's trying to push. Buyers are stepping back up. All right. Not a big size. Yeah, I mean, I wouldn't be going crazy with anything right now. Yeah, MNST would have to get above yesterday's high in order to but if it can, I mean, that thing could shoot. It was looking really nutty yesterday on that one. Oh, wait, what? How do I do that? Dual stream, automatically create a vertical crop version for shorts feed? Oh, yup. How do we do that? I hope it opens this where I want it to. Oh, it did. Nice. I think I have to do it. Interesting. Okay. That'll be cool. We'll stream on the shorts feed too. Ooh, that could be fun. Yeah, like to me, guys, if I wasn't doing this stuff with you guys, I wouldn't be looking at this right now. I literally would not be looking at this market. There's nothing like, let them do whatever they want to do with this, you know? Like we'll probably end in a little bit. I'll make some TikToks, YouTube shorts for you guys, and then just call it a day, you know? Be done. I like how Eli Lilly looks. This just looks filthy. MNST still looking good. Sox and TZA look good though. Sox S. They're just curling up to the upside there. Like, yeah, they do look good. And you can trade the inverse ETFs if you want to. It's just, this is what we were talking about earlier in the stream today too. It's like, or in the private stream, it's like, okay. A lot of people right now are going to see this market drop that we've seen over the last few days and be like, oh, I'm going to start slinging shorts now. And it's like, okay, you're kind of chasing because this has just gone nuke. Remember, there is the choice too to not touch anything. You should definitely do one about the bubble. I am going to do one about the bubble. That's probably what we're going to do. It's it's almost like, it's hard to explain, but like, why, what is so wrong with not doing anything? What do I think of BBAI? I kind of like how it's bouncing off the 200 here. Nice 2 tests of it. I mean, I don't hate that. My initial reaction when I heard that ticker was like, garbage, but like, it's not, I mean, I don't hate that. You would obviously want to see a shift back to the upside, a nice period of consolidation, and then, okay. I don't know anything, just based, I don't know anything about the name. I've done zero research on it, but I mean, if it breaks below here, I mean, you're seeing what? 467 at least, and then moving back down here. But I've given you guys this one a few times. Like, didn't I give you guys this break at 440 and it runs to $8? You got it last week? Yeah, that's fine. BBAI scanners at airports? No, I have no idea what this is. Maybe? But I have no idea what these people do. I mean, I gave you guys a trade on it and the stock doubled. Like, I don't... like... It doesn't. It's just a chart. It's not. I highly doubt that's something that I want to own for the long term. So yeah, I'm bored. I mean, Eli Lilly looks good. MNST still looks good. We'll see, though. MP. I don't care about the hourly time frame. The hourly time frame is not going to tell you anything really ever. The daily time frame does not look good. The weekly time frame is not going to look good. Do I watch Open Door? Well, I gave this one the trade idea on open at what, 265, and then every single day that this thing ran up, I was just talking garbage to Eric Jackson because he's a dumbass. Like, The dude standing outside of Drake's house being a moron. Like, but like this is just another retail pump name, but it is one that is very tradable, and you actually are looking like you're setting up on the weekly here. Not a great setup, but you do have a weekly setup starting to form. But this is just another example of like all of retail just like being so ungodly. Okay, this is actually a good example. Like when we were talking about before, you're like, oh, the volume on this is telling me something. It's like, yeah, but like the volume up at these levels right here, guys, is not going to tell you anything about like future price action. It's telling you that everybody's chasing this at the highs, you know? Looks like Bitcoin did what I talked about. It did. So far, it is doing it so far off of this zone. We'll see. Oh, yeah, Eli Lilly's pushing back up over 1030 there. That's good. That's nice. But yeah, this is not a name that I'm going to trade it. Like, it's fun to trade. Like, I give you guys these a lot where, like, the stock was at 267. It ran to $10. Lizard. Yeah, Eli Lilly getting a little push there. That's nice. Market's working its way up a little bit here, I think. Yeah, it's trying. It's trying. Where's MNST? Eh, we'll see. Or Soundhound. You guys are really going for the crazy high flyer, high beta, crazy retail names right now. Oh, garbage. Oh, jeez. Again, these are just for trading. These are not for owning. Unless you have a really, really solid thesis on these that like you got in early on, like these are trash. Like, sorry. I don't know what else to tell you. I warned you. These are going to be the names that get hit the hardest during these types of market environments. That's why I've been talking so much about this stuff today, where it's like the people that are really worried about this market right now, guys, are the ones that did not listen to me and said, oh no, I'm going to buy a stock at $20 when, let's say, in September or October, let's say, oh my God, it was up 118%. What are we doing? Like, the people that, like, and this is not like, oh, they did it on one stock. Like, there are people out there, guys, that bought Open at the high, Soundhound, BBAI, and all of these names that Twitter and these morons out there were talking about as being the next big thing after already being up 100, 200, 300% in a short period of time and just rugging people. It's like, what are we doing? Why are we looking at stocks that are up that much? You're late. Find the next opportunity. If they're not that hard to find. You know, I'm just like, ugh. And that is one of the reasons, guys, why you're seeing the fear and greed index where it is. Because people are getting burned because of the really stupid decisions that they have made over the last 4.5 months. You know? I'm like, oh, you guys just could have listened. If only you just listened. Now, I'm not saying you, Adrian, that you're in that category there, but like, you just want to know what you think about it? No, I know, Arthur. But BBAI is actually not in a bad spot with bouncing off the 200 there. Yeah, Daily Taylor's BBAI position is free. Off that, what was it, 2 something? 260 breakout? Something like that? Oh no, 440. Just kidding. Open was the 260 breakout. That's the thing I talk about all the time. It's just like, listen, you're probably going to do a lot better. If you don't listen, you're probably going to struggle. You know? That's why I give you guys those 50% off discounts for your first month into LTMP so that you guys can hop in and start learning this. You mainly hold Sofi at 10? Nice. Nice. Here comes the market. Hello. Now, you know what would be really funny today is if it went green. I'd laugh. I'd laugh so hard. If this position A, there you go, man. I'd laugh so hard if this market flipped green today. You'd just be in confusion territory for everybody. They'd be like, huh? What? That would honestly be one of the funniest things to see if this market flips green. It would take a lot, and we'd probably need to see a headline for it because I don't think the buyers are really strong enough now to do it. But it would be pretty funny if that happened. Eli Lilly, if this starts breaking out here, it could get fun. But all right, guys. I think we're going to wrap it up here for today. There's not really much going on. Market's flipping back to the upside. Even if we do see these big moves, I mean, again, you still have to be very, very, very careful. I love how Eli Lilly looks. Let's see what happens with MNST. But now that we're getting into the later half of the week here, Wednesday, Thursday, Friday, this is now when we can start hunting for some really fun post-earnings moves, guys. Think about it. You had 2 over 10x. Like, think about it. Even in these crazy market environments, guys, I gave all of you guys 3 10x trades last week. 3. And we did the math on the FedEx one. Like, okay, you basically be up on even half of your position that you would have made free after the big move. 15% on your account. You'd have to lose 15 trades in a row. That all go to 0 to go back to break even. So, I'm going to throw the link to LTMP in the live chat here for you guys one last time. It's also pinned to the top. Again, use code November. Gets you 50% off your first month. And you also get to lock in the lower rate. So, guys, yeah, Eli Lilly's looking like it wants to break day high here. That'd be nice. So, guys, I'll see you guys in a little bit. I'll be hanging out with you guys in LTMP. I'll make some of these videos for you guys. But other than that, folks, I will see you